All right, everyone, welcome back for another episode of This Week in Charts via Carnival Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivaltrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So spiders finished mostly positive here for the week. As you can see, mainly a nice surge on Thursday. Really kind of gave the market a lift. We did have some data earlier in the week. We had CPI, PPI. Overall, they ended up being mostly a nothing burger. And you can see kind of on Wednesday, we also had the Fed minutes. And, you know, they started using the word recession a little bit. And you see some short sellers started to come in Wednesday afternoon. And it wasn't enough to take the market down. As you can see, it got completely reversed on Thursday. Now, this is something we talked about, something I've mentioned multiple times here over the last couple of weeks. This market probably still wants to hold up a little bit longer. And you can see that evidence this week. It's really had a strong close. I mean, so if you look on Friday, you know, we had a little bit kind of profit taking, I would call it, in the morning. If we look on kind of the intraday time frames here, you can see we surged up in the morning, and then we really backed off all day. But we, you know, had a nice little pop off the lows towards the end of the day. We never really quite confirmed this little break of this trend line. So that trend line we're obviously watching here very closely. And if we can sustain above that, that can take you up to that 420 area. I'm kind of in that camp right now. I do think we get up into that 420 zone on the SPY, and we go fill that gap around 422.14. If you guys follow the futures, you can see here there's a gap right at 42, I believe 42.28. Yeah, 42.2850. Tiny little gap up there. So some areas that we could be targeting on the spiders. But again, we still have that kind of neutral to upside bias. And you can see the volume still, you know, we did have a little uptick in volume this week, but still on the lighter side. And as long as that's the case, generally the market's gonna, you know, I'm gonna give the market a neutral to upside bias. What would change that? If we get a high volume reversal, really. So if you just get a big sell-off with high volume, that would change my opinion. But for right now, a little bit longer here, and then I think we will get into a period of risk, a window of risk, where we could see actual significant downside moving into, you know, kind of Q2 here. But for right now, especially with given that, you know, we're going into options X week of the month of April, so options expiring this Friday, generally the market wants to hold up into those time periods. You don't really get too, it's not often you see major sell-offs or major moves into those. You can get a top, but usually it's more of muted, and then you'll kind of see, you know, if you do get a top like we did in August during an options X week, it's kind of muted at first, and then you kind of get the selling later. But for right now, market's hanging in there okay. However, there are some serious red flags here that were previously yellow flags, but now I would start to call them red flags, especially as we get closer to my risk period here. One of them being the Dow transport. So if you know Dow theory, the transports should be leading in a bull market, and they should be, you know, leading to the downside in a bear market. And right now, they're, you know, if we look at the spiders again, go back over here, you can see, you know, we have this low, and then we've got a higher high and a higher high and another higher high. And we go back to the transports here. Yes, you have a low, and then we made another low, and now we've got a high and a lower high here. So the transports definitely lagging, and they're definitely way off. I mean, take a look at where we were on February 2nd, and the transports, you know, all the way up almost at 16K. We're at 14.2 right now. And then the spiders, you know, they're basically at the February highs. I mean, you know, they're just a stone's throw away, just 4 or 5 points away on the spiders there. So that is showing laggardship. Another sector that I look for as a leading indicator is the semiconductors. And you can see this week, we kind of had this, you can see this smaller rising wedge here in the green, and that got broken through. And, you know, we came up, we tested it, and then we backed off, you know, it acted as resistance, and now we're kind of just going sideways here. And inside of this bigger rising wedge, right? We talked about this multiple weeks ago. I don't see the semis getting through really 260 to 265. You know, that's pretty much max move right now. And again, you're seeing a high and then a lower high there. On the SMH versus tech here, the triple Qs, you do have a high and a slight lower high, but much, you know, the triple Qs here is a much better chart, just in general. See, from, you know, the 22nd, you have a higher high, and from the semis here, we have a higher high there, but now we're below that pivot there. So semis showing laggardship. NVIDIA, you know, that's a big one. Everybody's following that. This looks tired to me, honestly. We've got this kind of rising wedge here that kind of broke off at the top. There is a, believe it or not, a triggered head and shoulders pattern there on the daily. We'll see if that holds up. But either way, semi is looking tired here. I don't see a ton of upside, and it is a bit of a red flag here to me to see them continue to lag. Another area that has been a focal point for the market. We'll talk about fins in a little bit here, but KRE, I mean, this is just, you know, if the banking crisis was over, I know Jamie Dimon came out, you know, JP Morgan had great earnings on Friday thanks to, you know, trillions of dollars in basically forced deposits at this point, up 7.5% on the day. But if you look at KRE, that was down. And I know he came out and said, oh, the banking crisis is over. I don't think it's over here. If you take a look at the KRE, that's telling us a different story. If the banking crisis was over, you would get down here and then you would have a V shape, right? But we're not V shaping. We're basically back to the lows. And on Friday, we had an engulfing reversal there. You know, for the most part, we saved it by a couple of pennies. But this is not far off the lows here. And the longer this stays down here, the more of a problem that this is telling us it is coming. So lots of weakness there in the regional banks still. And I think that will, you know, there's probably going to be another shoe to drop. I know we've talked about commercial real estate. Over 1.5 trillion is going to have to get you know, renegotiated at a 5% rate, you know, so that's a 500 basis point increase from the last time that these, you know, these deals were going to be made. And, you know, that's going to be a problem for these banks here. Another area that is a red flag, Russell 2000, that makes up, or excuse me, regional banks make up a good portion of the Russell 2000. And the Russell is equal weighted, right? It's not like the spiders and the Qs where, you know, 25% of it is Apple and Microsoft. This is equal weighted, and it's a good gauge of strength. And it's also, you know, since it's a small cap index, it's a good gauge for an appetite of risk. This is not performing well. Weekly time frame, that's a big red bar and a bear flag on the weekly, and on the monthly. This is just a big bear base here. So nothing good really that I'm seeing from the Russell. And again, speaking of lower highs, I mean, yeah, you've got like slight higher lows here, but you have essentially equal highs, and we're still stuck below the red bar from the 10th of March. And that goes all the way back to, yeah, you got to go all the way back here on the spiders. So take a look at where the spiders are. So you got to move from 386 to 412 versus the Russell, which is still below, you know, that 180, 181 level from last month. So, you know, again, Russell showing weakness. You know, you don't want to see this. You know, if it's a bull market, you want to see the Russell and the NASDAQ leading. And we're seeing the Russell lag heavily here. So that is another red flag here as well. Again, overall, market can hold up for a little bit longer, I think, but we got to get, you know, more on the guarded side as we get closer to the month of May, and really even possibly even the end of April. May, you know, I am seeing some possible risk here come in sooner, but for now, again, market's hanging in there okay. Again, I do think it's likely we go up there and test that 420 level there. On the spiders for the triple Qs, there is that little gap right there at 323. It's not that far away. If you get through that, there's one at 329 as well. So that's not too far either, but for right now, I'm expecting the market to hang in there okay. Structurally, there's no problems, but we're getting, you know, I'd say a window of risk is not that far around the corner here. So anyways, let's get over to the Dow Diamond here that finished down 0.5% on Friday. Nice pop on Thursday. Again, this is leading here. When the Dow leads, it's not a bullish sign. And this has been leading since really that banking crisis last month. Not a ton of upside here for the Dow. There's a lot of resistance in this area between 340 and 343, but you know, it can trade up here. There's also this trend line that could get back test, see pivot, breakdown, and then you back test it again. We could get up there right into that area around 343. That would be a stiff resistance, right? Because you got a pivot here, you got a reversal bar, as well as this upsloping trend line right into that kind of nexus, that zone. So that would be a really good area. Plus you're extended. So that's going to be a ton of resistance there for the Dow. In the short term, if it consolidates, then it could go potentially a little bit higher here, but that's what I'm seeing right now on the Dow there. All right, so we talked about semis already, but let's briefly just discuss that again. If you get below that 50 moving average, we're going to go test this trend line. If that breaks, that's going to be a huge negative for the market. That would take you down to probably around that probably 240 to 235 area in pretty quick fashion here. There's also that 100 moving average. If it holds up, then we can get up to this top trend line one more time. But semiconductors to me are on borrowed time here. I don't know if you guys caught that Warren Buffett interview the other day. He said, you know, they asked him, why did you sell your entire position in TSM? And he really fumbled over that question. And I've never heard Warren Buffett ever. Yeah, just go watch it, guys. I mean, it sounded like he was catching himself. It sounded like he was going to say something about concerns with China, Taiwan, and he kind of just talked himself into a circle. But he did liquidate his entire TSM position. That to me says that he's concerned about that. And again, I think the semis are in trouble here, and they're talking to us right now. But those are the levels anyways. Cloud software here, IGV, it's still hanging in there okay. You know, up move, and you're still just sideways. We'll give it the upside bias at 310. Nothing has changed there. That's holding up just fine. Dow Transports, as you already mentioned, if this pushes through this green bar, then you could probably get to 14.75. That's really all I see at the moment here. On the downside, you need to hold these pivots. Otherwise, it's back down to the lows there. All right, over to interest rates here. So let's talk about bonds a little bit. The 2-year, that did back off quite a bit on Friday. I know the Fed speakers were out in full force. Waller really kind of talked rates up a little bit. So we do have a 25 basis point hike priced in for the May 1st FOMC as of right now. And so, you know, that did push the bond market, you know, into a little bit of a pullback there on Friday. The 2-year Treasury note yield is still only at about 4.1. So, and the Fed funds rate is, you know, about 90 basis points or so ahead of that. So technically the Fed is ahead of the curve right now. If the 2-year yield starts to push up, that can change and that can put pressure on the Fed. But for right now, they seem to be in the safe zone here. There's the 10-year note that's holding up okay. I don't see any issues at the moment. And same thing with the 30-year here. If we get fear again, you could see a spike in the 30-year one more time. But I don't see a ton of upside here, specifically in the long bond. This is the yield. Right around that 3.2 area. That's kind of like the max move to the downside there that I see for the yield. But again, you know, bonds are holding up right now, and we'll leave them at that. Over to home builders here, XHB continues to hold up. You know, possible lower highs here again. So we're watching this kind of possible descending triangle. You've got equal lows and now lower highs. So if this comes back down to this area, this is going to be weak. One more time, you've already hit it 3 times. So we'll see what it does going into next week. But home builders have just been defying gravity here. Look at the ITB. You know, it's basically at 52-week highs here, and that's with interest rates at 5%. You know, what can you say? Sometimes things aren't going to make sense the most macro way, but the chart's telling us that they're holding up here, so we'll respect them. Again, I think this is another sector that's on borrowed time, but hey, it's showing strength right now, so we got to respect that. VNQ, so general real estate, that took a pretty good hit on Friday. That's weak, and you lost that green bar low on a closing basis. They just barely saved that 20 moving average, but this is a weak chart here. So general real estate equities are in trouble again, and you know, this originally I would have given this the upside bias to 85.50. I'm not so sure it can really get up there now. Again, the only positive here is you save that 20 moving average there on the daily by Friday's close, but you also lost that green bar, so that's a failed inside bar pattern. And you know, there's gaps down here that need to get filled as well, so not a good look there really any way you look at it for the VNQ. Over to fins, so XLF, again, we talked about JP Morgan. We got kind of this little rising wedge here, which we gapped above on Friday, finished with a doji. You know, if this continues up, it can get up to the 33.50, 34 area. You've got the 200, the 50 moving average up there, and you know, kind of these pivots right there, right? So that's where they reversed it. So that's where, you know, the money should be sitting. But for right now, XLF is holding up. Again, Berkshire, right? So Berkshire and JP Morgan really, I don't see a ton of upside in Berkshire there, by the way, but Berkshire and JP Morgan really kind of driving fins higher here off those earnings. Bank of America got a sympathy bid. Wells Fargo actually finished red, so that's a weak one right there. Citigroup finished decently up, almost 5% there. And Goldman and Morgan Stanley were also higher as well. Though Goldman, that's probably about it here. There's a lot of resistance up there for GS, but that did help the XLF out. Again, we talked about KRE, very, very weak. KBE, also pretty weak there. That's holding on by a thread as well. And then broker dealers here, that got a bit on Friday as well, but Again, this weekly pattern here, that's a big down move and then sideways chop. So that is an inside bar there on the weekly. So that is telling us that wants to go lower here. Not quite ready yet. Might need a little bit more consolidation, but this does want to push down. If you lose these pivots, it's probably down to 410. So just be aware of that with the XBD. All right, over to energy here. So let's look at crude first, as always. Crude hanging in there and actually had a nice bid on Wednesday. And it was able to hold up, so it had nice gains here. I don't think this, the 200 moving average right now, I know everybody's going to look at that. But you had a nice little consolidation. There is a lot of resistance in this zone, though, for now. I don't think this is ready to push higher yet. I've kind of talked about this the last week or so, that there's just a really big gap there. And, if it was just a daily chart gap, it wouldn't really bother me. But this is a weekly, daily, monthly, quarterly gap, right? So I'm looking at a quarterly chart right now. It would just be highly unusual for this to not get filled before crude really advances here. But I think it probably has an up move first and then a pullback, and then we can reevaluate it from there. But right now I'm not doing anything with it. There's just still a lot of resistance up in this zone. So we'll see what it does next week. But crude hanging in there okay. I don't see any problems at the moment. XLE also holding up decently well. And it's, consolidating beneath this pivot. So this can push up. If it does, we'll look at it in the upper 80 area in the near term. But that's holding up okay. XOP is a little bit on the weaker side. It's not terrible. Nothing terrible here. Again, you're just kind of grinding up against this trend line. If this consolidates further, this can get to 140 again, and maybe a little bit pierce of 140, but nothing terrible there. I like how you kind of broke out of that. It was trying to have kind of a bear consolidation, and then it pushed up through that. So that's a sign of strength there. But XOP a little bit weaker than XLE, and then OIH really all over the map. It did test 280 again this week, and it held by the end of the week. So it's holding up, but this is just, too sloppy of a pattern here for me to want to do anything with it at the moment, but it's holding up okay. Nat gas here. So nat gas has just been very interesting lately, and I talked about this on my channel a lot this week. But if you look at what I think is happening now is the algos right now are basically programmed to buy nat gas when the dollar bids and sell when the dollar sells. And if you take a look here, if we do a comparison, I'll throw the DXY on there and you'll see it's been a pretty good positive correlation here. So if we go back to even last year in 2021, 2022, we had this big bull here, big run up, and then we kind of had the pullback, and they both peaked around the same time. And then we came in here, peak in kind of like late fall, October, little rally up. And notice how when the dollar put in that double bottom, or that, now it's a double bottom, but back in February when it put in that low, nat gas stopped making new lows. And then we had that little flush out, rally up into the early March, and then we backed off. And take a look here, even on the intraday time frames, you can see the hourly. This is an hourly chart here. I mean, it's basically about as positive as a correlation as you can get here. Even on Friday, when nat gas gapped down, the dollar put in a low there, and then nat gas took off when the dollar ripped. Waller kind of turned the market around when he talked up rates, and that pushed the high. So basically my thought process here is the algos are programmed to look at it as, okay, higher dollar, more expensive LNG exports for Europe. That's really the only sense I can make out of it here. It's an inflation trade, and nat gas is benefiting from that when the dollar bids, and when the dollar sells, it's harder for nat gas to rally. Right now, though, as far as the technicals are concerned, you can see we've hammered on that $2 level here, and I'm going to go to a 4-hour time frame here. We've hammered on this $2 level multiple times. We made a lower low, and then we got a nice bid off of that. So seeing some signs of seller exhaustion here, but if the dollar does put in a bottom, and if we flip over to the DXY here, if the dollar can hold this double bottom and get going, we'll see if that translates to a rally in natural gas prices. So interesting little correlation there. I think the dollar can get a little bit lower here. I would have felt better if we had gotten really kind of this trend line, but it's holding up okay, hit that double bottom, and it's hanging in there for now. As far as the nat gas, another thing too, I know I get a lot of questions about these producers. There is some chatter about Exxon looking at EQT, and I believe AR and Terra Resources is also getting a sympathy bid, and even Chesapeake So there is some M&A stuff going on in the sector. I do like the charts on some of these nat gas producers as well, AR, Chesapeake, and EQT as well. So some M&A talk there in the sector, and that is giving these producers a bid here. Speaking of, let's shift over to energy, or well, we were talking about energy already, but let's talk about the potash name. So there's cheaper natural gas price here. This is good for these potash producers too. So it'll be interesting to see how these perform, or how that affects their margins on the next balance sheet or the next earnings release. But Mosaic's still holding up again. Remember, we haven't looked at this one in a minute, but still a big just monthly chart consolidation pattern. So no problems there. For MOS, still holding up okay. Nutrien did back off last couple of weeks here, but it got a bit off the lows, and we talked about that monthly bar, that monthly this green bar here, and that's holding for now. As long as that holds, this is still just a monthly pullback pattern. So we'll be watching those moving forward. As far as DBC, that is still holding up. So we talked about this as well. Failed breakdown here. It tried to break down. We got back above, then we gapped above this trend line, and it's still holding up. So DBC, if that consolidates, that can get to 25, but nice move there for those ag names and those potash names there. All right, let's get over to quickly do uranium. So CCJ holding up decently on the week. It basically went into double top there. If it gets through that, you've got a gap at 27.25. That's about all the upside I see for that at the moment. URNM, it's hanging in there, but again, still struggling with that trend line there on the weekly. So this is in a much weaker technical position than CCJ. But if you get back above that trend line, this can push up into, we'll say the 33 to 34 area. But as long as it stays below that, this is susceptible to a correction here. All right, let's get over to, so we talked about the dollar. Let's look at the gold market here. So gold futures holding up decently well. Had a good sell on Friday though. So a pretty good little dump there into the Friday close. Still held trend though. We're holding that 20 moving average on the weekly. It did finish red, a little inside candle. I don't see any issues with it right now. I do want to talk about, so I know Jason talks about these guys all the time here, and specifically the royalty and streaming companies. And I tweeted this last week, but this is a chart of GDX here going back to 2007, and you can see it's actually down 5% since 2007. And here's the chart, and then this is Wheaton, FNV, and Royal Gold, and you can see the difference here. And so it's just so much more efficient business model, so much less risk, so much less capex that has to go into it. But these producers, these royalty and streaming companies, are holding up much better. A good ETF to track them too is GOAU. It's got all the good ones in there, and that's held up well. Obviously, GDX has had a nice push off the lows as well. I did have a little fib on here. There's some resistance that it came into on Thursday, right into that area there, and you can see the 7.5 fib. But that hit some resistance on Friday. Very overextended, very extended move here. So I do think gold needs to pull back in a little bit here. Same thing with silver. Silver's a little extended here. Had a pretty good reversal on Friday, and then went right up into that green bar there. But overall precious metals, they're getting a fear bid right now. If the banking sector can somehow stabilize, that will probably put pressure on these names, or on the precious metals, and maybe cause a little bit of a pullback there. But for right now, what can you say? Big move there off the lows for the metals. But what a remarkable chart! Like, who would have thought that GDX is actually negative since 2007? Pretty amazing moves there. Anyways, platinum here holding up. So it's nice move. We talked about 1040 a bunch of times. We blasted through that, and if this consolidates, this can go higher. I don't see any issues here with platinum. There is resistance up here around 1080 though, so just be aware of that. But nice move there, getting through my level at 1040, and platinum looks good. Copper really kind of all over the map here. It broke down last week. It broke through that green bar, and then it tried to bear flag, and now it's pushing up again. Then it came way back in on Friday, so it's hanging in there okay. I'm not sure what it wants to do. If I'll give it the upside bias to 420, 423 if it can consolidate, but I still think this needs to go back to that 375 area by some point. All right, lastly, let's get over here to Bitcoin. So let's look at BTC. So that's holding up okay. Again, nothing's changed. We had a nice breakout this week But nothing's changed price target wise. So I'm still looking for, I said 30, it's got to get above 30,000. It's done that. And right now it's consolidating. So this can have one more thrust. And I do think it will. I would say about 32 to, we'll say 32.5. And what I'm really going off of is this weekly red bar high. It's actually, that's actually 31.7. Let's use a monthly. So there we go. So that's right around 32,000. And then you have the monthly 20 moving average right in that area. That's 33,250. So that's where the big resistance zone is for me on Bitcoin. But it's held up really well and it's acting well. So you have an up move, right? And then you're just going sideways. There's nothing wrong when you see, a stock or an asset do that. But that's really the big level of resistance that I see on Bitcoin for now. But it's holding up okay, and we'll respect it for the time being. I'm in the camp that this will probably top out around the same time the spiders do. So again, we're still giving the market a little bit more of an upside bias, and it would be interesting to see if we get up into this 422 area here on the spiders, the same time we get it to that 32, 33 area there on Bitcoin. Could be telling us something that we're close to a top. But anyways, guys, gonna wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivaltrades.com. I will talk to you guys all next week.